Coming up on this show, the Russell Range and the Big Cap Blast. Hello everybody, I'm Angela Miles with the Russell Report. There was some robust trading out of the gate today, mostly off of that December jobs report. 145,000 jobs were added. It was expected we'd see 160,000, so a disappointment there. The unemployment rate remained the same at 3.5%. Checking trading in the Russell right now, it's down a fraction to 1662. The index had a low this week of 1646, so a tight range in trade. The ratio today, one call trading for every 1.4 puts. So lots of puts happening there. The March 1500 puts getting some activity. Those are traders buying those puts, looking for protection. The RVX, which measures implied volatility, is down. It's right around a 14. So those put contracts are really considered on the inexpensive side for traders who are taking out that protection. Now this week, the March 1790 calls were generating some interest. Taking a look at that straddle for next week, it's projected we could see a move of around 1.4% in the Russell. Keep in mind, earnings start next week. And about that big cap blast. Okay, those big FANG names, especially Apple, have been getting a lot of attention with new record highs. Well, the Motley Fool is calling the small cap stocks undervalued compared to those high-flying names. They're just not being loved right now, are they? Coming up next, to do some trader talk. Joe Tigay of Equity Armor Investments joins me now for some trader talk, taking a look at the small caps versus the big caps. What would you be doing as a trade in the Russell at this juncture?
Yeah, just looking at the market look as a whole, and you said small caps versus big caps. The NASDAQ, for example, NASDAQ 100 is the highest price to earnings ratio since 2007. Wow. We all know what that means. 2007, we know what happened after that. So maybe it's time for a sector rotation trade. Maybe it's time to look at these small caps again. But again, with the market so lofty, out these all-time highs, I think a proper trade for me would be to look at a stock replacement strategy, buying some calls instead of owning a stock. If there is a downside event like we know 2008, you'll be much better off in calls rather than stock.
Well, good to know. Thanks so much for being here. I'm Angela Miles. Have a great weekend, and I'll see you here next time.